All right, we're going to begin our afternoon sessions here. The next panel is about financial inclusion, obviously, but through a slightly broader lens. It's going to ask the question, financial inclusion to what end? Now, there have been several references to that, economic inclusion and the betterment of people's lives. Obviously, you've heard that a couple of times already, yesterday and today. But this panel is going to look at financial inclusion as a stepping stone towards economic inclusion, and then economic inclusion as a stepping stone towards a better life, but from the point of view of smallholder farmers. At the foundation, we pay a lot of attention to smallholder farmers. We have a number of partnerships working in that area, and we think this is an important topic that we need to pay attention to. So the person leading this panel is somebody who has real on-the-ground experience working with smallholder farmers. I know this because I saw the project in application in Tanzania. Sieka Gatabaki is the Digital Financial Services Manager for the AgriFin Accelerate program of Mercy Corps, and he's going to come out and he's going to bring his panel, and I would ask you to give him a warm round of applause, please. Sieka.
I'll try and make this very exciting and sweet. It's a very practical conversation. Someone in the morning actually mentioned that they felt that the person that they were representing on their badge would have found the conversations a little bit higher level. So at this panel, we're going to try and bring this conversation all the way down to the smallholder farmer. So the title of the session is Employing Financial Inclusion to Achieve the Economic Goals of Africa's Smallholder Farmers. It's going to be a one-hour conversation. And yesterday, there was a conversation around whether financial inclusion is enough, or are we talking about meaningful financial inclusion? And so I was of the mind that I might want to add meaningful financial inclusion to the title of this session. But I thought to myself, because of the organizations that are represented in this panel, their close and intimate relationship with the smallholder farmer would suggest that the financial inclusion that they're offering to these smallholder farmers is indeed meaningful inclusion. The challenge of employing and deploying financial inclusion to smallholder farmers is a great challenge. We all know this. We've been practicing this for many years. In fact, yesterday, there was a presentation or a presenter that suggested that even with the great success of mobile financial services, this has only lifted 2% of households out of poverty. Very humbling statistics, only 2%. And for someone like me, who was a former telco MNO person, who was there when M-Pesa started 10 years ago, who was competing, offering services, trying to find the way to build adoption, the pathway to great usage, and the achievements that we had, I truly believe that there is an opportunity for financial inclusion of the smallholder farmer. The opportunity exists. We all know that in terms of finance for smallholder farmers, about 70% of their needs are met by agribusinesses and the informal sector. So there is an opportunity. There are hints of a pathway. There are ways in which we could actually build an ecosystem where smallholder farmers are included and their farming practices are viable and lead to them achieving better economic goals. Often when I come to a conference like this, I have conversations with different practitioners. And I like to ask them how they're doing in terms of achieving the economic goals of smallholder farmers. I had a conversation with Hedvig on Tuesday morning, Hedvig from Agra. We talked about many things. One of the things we talked about was how mechanization was changing the incomes of smallholder farmers. Yeah? The time that it saves them allows them to engage in other economic activities, increasing their incomes. The productivity that is gotten from mechanization increases their output from their farms and again hits their incomes at the end of the day. Finally, I also had another conversation with a lady from the insurance industry. We had this conversation at the cocktail. And she mentioned that they're offering a bundle of hybrid seed and insurance. And she went to visit two of their beneficiaries, two single mothers. And when she visited them, she found out that these two mothers were not only farming in their land, but had already started to lease out additional agricultural land because of the incomes they were getting from this bundle, from this hybrid seed. And they had the confidence, believe that agriculture is a pathway to out of poverty. These are the conversations we're going to have today. I am joined by great people from great organizations. Allow me to introduce them. In the middle, I have Emmanuel Yawson. He's a sustainability analyst with Barry Callebaut, working with the Global Cocoa Sustainability Team to coordinate financial sustainability reporting for Bioportinaire of Ivory Coast, Nyankopa Cocoa Buying of Ghana, and Biolands International of Tanzania. He has over 10 years experience in the cocoa industry. Next to him, definitely the gentleman in the pinstripe suit, a banker, Mr. Dickson Naftali. He's the head of MobiGrow at Kenya Commercial Bank. Kenya Commercial Bank is one of the largest retail banks in Kenya. Dickson comes with 16 years experience in the sector. He leads all MobiGrow activities in Kenya and Rwanda, including financial services provision, as well as non-financial services. And last but not least, Catalina Eikenberg. I got that right here. Yeah. Catalina heads sustainability at Bernhard Rothfos, which is part of the Newman Cafe Group, the largest coffee trader in the world. She was previously the country manager at TechnoServe, an American NGO working on business solutions to solve poverty. So we're going to have a conversation, and to kick us off in this conversation, I'm going to invite Catalina to share with us their model to include farmers financially. Thank you.
This is Hawa Namusoke. She's 43 years old, a single head of household, a family of 5. She's got 3 acres of planted Robusta coffee, 1,500 trees. These trees are by far her most productive asset. Last year, she sold $1,200 worth of coffee, and this is the one single reliable data point we've got with regards to her income or potentially her indebtedness capacity. The traditional provider of financial services of Hawa is the local village coffee trader, sometimes called Coyote. The way it works is when Hawa has a need, let's say for school fees, medical emergency, she will go to this person, she will get maybe $50, and in exchange, she will pre-sell part of her harvest. There was a GIZ study in 2015 that estimated when Ugandan coffee farmers engage in this kind of pre-selling, they end up paying a monthly effective interest rate of between 75 and 140%. Unfortunately, the study also estimates that 95% or more of the 1.5 million Ugandan smallholders engage in this kind of transactions because it's the only way they can get cash whenever they have an urgent cash need. And what happens is they're trapped in this cycle of poverty where they are struggling to meet the day-to-day needs, and obviously they never get to invest long-term in their farms. So the good news is, as of last March, things have changed for Hawa. She's got another option. Her farmer group started working with our farmer financing unit, which we began at the beginning of this year, also with support of the MasterCard Foundation Fund for Rural Prosperity. She applied and was approved $200 more or less worth of fertilizer and $70 worth of cash. In July, she met her repayment target through bringing coffee to her group, subsequently coming to us. And in August, she applied for the next round of fertilizer, the next round of cash. This means she's on track in our 2-year crop nutrition program. This means she's on track to doubling her productivity within 2 years. And Hawa is in many ways our classic client. So she has been producing coffee for more than 10 years, but she has never used chemical fertilizer. What that means is that her soil and her trees are incredibly responsive to nitrogen because they have never received this nutrition. So the potential return on investment on that fertilizer application is between 100 and 300%. And this is exactly the value creation opportunity that we want to unlock. It's basically bringing the green revolution to Africa, and actually not just to Africa. We know that the exact same challenges that she faces are also happening to smallholder farmers in Indonesia, in Honduras, in Mexico, exact same thing. So we have decided that we want to do this not just for Hawa, but for many more farmers. And in all honesty, we're not doing it because we want to lift people out of poverty. We're not an NGO, we're not a charity. We are the largest coffee trading group in the world. And we want to do this because we want to remain the largest coffee trading group in the world 50 years from now. We know if we want to achieve that, we gotta get close to farmers like Hawa. We gotta understand very intimately how she can produce more, and if she can produce more, and if she can sell more coffee to us, then we can also make more money. So when we first approached financial service providers and we said to them, look, here's an opportunity, more than 100% return on investment for fertilizer application for X million of smallholder farmers. And the standard response is, it's too complicated, it's too risky, farmers are too atomized, the costs much outweigh the potential returns that one could make lending to them. So we said, okay, well, I guess we gotta do it ourselves. We gotta try it out ourselves. So this is what we're doing now. And we believe we're innovating to make sure that we can do it in a responsible manner, in a manner that is commercially viable. And so I'm gonna tell you a little bit about how we think we're innovating. So first, we've got a very thorough farmer-centered product design. So we've got 2 products. We've got a fertilizer value creation advance, where we give farmers fertilizer at the right time on the year when the soil needs to be fertilized, that's during the rainy season. We give them the best fertilizer available. We've conducted soil tests to make sure the chemistry that we're providing them is exactly what they need. And we are also making sure the fertilizer is delivered to their doorstep, because distribution is a huge issue. So that's one part. And the second product is a consumption smoothing cash advance. And the way it works is more like a permanent credit line. So we pre-approve a total cash amount for each farmer based on past coffee deliveries. And then the farmer tells us when he or her wants the disbursement to happen. And they tell us by sending us a USSD code. The moment we get that USSD code, the disbursement happens through a mobile transfer immediately. So we're going pretty aggressive here in replacing the local coyote as the source of cash for smallholder farmers. Because we know if we cannot get them out of that cycle of pre-selling the harvest at hugely discounted rates, then the farmer is never going to be able to ultimately bring their coffee to us. But at the same time, we know we cannot give them just cash, because cash per se is not going to increase their income. So this is why the fertilizer as well is so important, because that's what's going to increase their productivity, increase their income, and ultimately really get them out of that poverty cycle. For both products, the repayment happens during the harvest season of the coffee. So we get repaid through coffee beans, and we really don't want to get repaid through money, because we're not really interested in money, we're interested in coffee. And then the second part of our innovation is partnerships. So looks pretty complex, and it is. When we first started on this, we were very aware we're not microfinance people. We're coffee traders. So we decided, okay, we need help from microfinance experts, and we chose IPC because we believe they're the best at what they do. They've created microfinance institutions from scratch again and again in a pretty systematic manner. Most of you will probably know the pro-credit banks. And IPC is helping us navigate this journey of figuring out how to structure products and processes that are tailor-made for coffee farmers. We've also got a technology company called Fieldbus, who has an app, works in a smartphone, and through that app, we receive applications, we track coffee deliveries. So if you will, we don't really have a bank branch. Basically, the bank branch for us is replaced by a smartphone that sits at a farmer's group. Aside from that, we've entered a public-private partnership with GIZ, the German government, who provides financial literacy and good agricultural practices trainings to farmers through the Neumann Foundation. And we've partnered with Yara, whom we believe has the best fertilizer today. And Yara makes sure the fertilizer is delivered at the farmer's doorstep, as I said. And last, but not least, in the backstage of all this, we are risk-sharing the portfolio. We're sharing the risk in the portfolio of loans to the farmers by 50-50 with ABN AMRO, who provides the financing line for us. And we've also got a first loss guarantee from IDH for the first 5 years. Without this sharing, it would have also probably not been possible to engage in something that's so new for a coffee trading group like us. And we know the partnership structure is complex, but we are also very, very much aware we cannot do this alone. Thank you very much.
Thank you, Catalina. Thank you, Catalina. When she talked about them getting into a business as an MFI and them being a large coffee trader, reminded me of the days when we were in the telco market and we're saying, well, financial services, maybe this is a bank product. Are we sure, are we the ones who are able to do this? Can we ideate, can we come up with solutions that are relevant to customers? But without taking that question much further, allow me to ask Emmanuel to kindly share with us a little bit about their solution and how they're working with cocoa farmers in Ghana.
Thank you, Sieka. Biopartner, or biopartner as we say it in French, is a cocoa sourcing business and is part of the Callebaut group. Callebaut is the world leading producer of industrial chocolate with our head office in Switzerland. And then we have 55 factories across the world. And we also have sourcing companies in all the origins where we have our factories. So what BioPartner does mainly is to source cocoa beans from the farmer. And we go to the very remote areas where cocoa is grown in Ivory Coast to buy cocoa from the farmer. And we want to buy cocoa in a sustainable manner. And for that matter, we want our farmers to produce cocoa using the best agronomic practices and using the practices that will ensure that cocoa production is sustainable. And so we do our own in-house research to see the best way of producing cocoa. And then we go to the ground and see how these farmers are also cultivating the cocoa. And then we realize there's a gap between the knowledge that the farmer has and the knowledge that we have also acquired from our research on the best way of cultivating or producing cocoa. So what we did was to design a product that will fit into our sustainability agenda. And the product was designed in a bundled form where we have, we plan to give inputs, agro inputs to the farmer. We plan to provide professional agricultural services to the farmer. And we also plan to give crop protection to the farmer. And this we do based on the research we have. But we know the farmer or the smallholder is our customer and he's the one who is going to use the product. And we need his consent to be able to provide these services. So we go down to the farmer using our system of coaching. That is, we employ people as coaches, we train them, they go to the farmer, sit with the farmer, talk to the farmer to assess the level of knowledge that the farmer has. They assess the condition of the farm, and then together they agree on a product that is good, will be good for the farmer to implement in order to sustain his farm and also to improve the yield from the farm. And so we came up with what we called our productivity package, which comprises crop protection, fertilizer application, and professional agricultural labor services like pruning and spraying services. And we put them together as one product and deliver it to the farmer. The main idea is that the farmer, in using the product, will see improvement in their yields and therefore see increase in incomes so that he can come back and buy the product and continue to produce cocoa for us to also process.
Thank you, Emmanuel. From your presentation and Catalina's, I'm hearing a lot of sit with the farmer, talk to the farmer. A lot of costs are being collected or gathered in these research activities to actually put the customer in the center, to actually meet the needs of these farmers. But before you answer that question, I'd like to go to the far end and talk to the banker in the room, the banker in this space, and see what are they doing, a large retail bank that's looking to directly target smallholder farmers. Dickson, could you please share with us your model?
Yeah, so as a bank, we were tired of sitting and waiting for large farmers with large tracts of land walking in to ask for these big loans and facilities, or aggregators who have the financial muscle, or the off-takers. And for a long time, the bank has been asking themselves, how do they get into this smallholder farmer space? And so studies were done, and they revealed many results that showed a lot of thousands of millions of smallholder farmers are neglected and sort of left out. So this study also went ahead to say that an institution that really wants to be dedicated to smallholder farmers has to go out of their way to come up with a business model that is different to target this segment. And one of the challenges in this segment is that the smallholder farmers would not have the collaterals that the large farmers would, the large banks would want to come and attach to a facility. They lack securities, they lack credit history. And so the bank had to come up with a business model that replaces these collaterals and securities with farm production data. Now, the other tricky bit again is farmers don't keep records. So where do we get the farm production data to be able to lend to the smallholder farmers? So again, it was by looking at the other value chain actors where the farmers take their produce, like the buyers, like the aggregators, like the off-takers, and trying to get that information and create a credit score out of it, put a value out of it based on average prices and get a score and inform the farmers a limit of how much they can borrow. So this was done through a partnership. Now, the next thing was how do you then also de-risk these farmers so that they can be able to repair a facility when you give them? And this had to be done. This had to be done through looking at the value chains that the farmers are in, understanding the farmers more, and if they have knowledge, the right knowledge for these value chains, if they are receiving timely and quality inputs, and if they have a market to sell to, so that if you give them a facility, they are able to stay in business and repay that loan. So that's how the bank got involved into non-financial activities, and through partnerships with AGRA at the beginning and MasterCard Foundation at this point, this is able to be done. So we are hoping to demonstrate a model of financial and financial services that is going to assure our investors and stakeholders a good return on investment eventually. So this is what we are doing. And it's a digital product, just so that we can reach the geographies that are vast and tapping into technological ecosystem that has been created by M-Pesa, just to ensure that we reach out to these farmers at all corners of the country.
Thank you, Dickson. You've mentioned partnerships quite a bit. Catalina also in her presentation talked about partnerships, even though they actually are the primary person lending. Emmanuel talked about partnerships working with financial institutions to actually offer this productivity package. But back to Emmanuel and Catalina, the question on the research, the cost of research, the cost of getting to know and be intimate with your customers, with your farmers, so that you can understand their needs and come up with these financial products. What does it cost your various organizations? And what kind of activities do you guys conduct on a day-to-day basis to get this intimate knowledge? Catalina?
Yeah, so there's definitely a specific effort we've made as we made the decision that we wanted to engage in this. But in all honesty, we've been working with, well, we've been buying coffee from these farmers for almost a century. So we buy coffee from between 2 to 5 million farmers every year, year in, year out. We do these, transactions with them. We did already have a pretty good sense of their challenges, and it was more a matter of making the decision to go out there and then start asking them some other specific questions. So for example, on mobile money, whether, what kind of penetration there was, and for those that have never used it, trying to, bring the mobile providers. But all in all, I would say it's the relationship with them is already there. Like, we're already interacting with them constantly, and it's more starting to pay attention now on this angle around financial services. But I would say the cost is not huge. It's more actually thinking about it and planning it within the operation, but the operation is already there. The interaction is already happening, so.
Thank you. Emmanuel, did you want to add to that?
Yes, it's similar to what Catalina has said. We have also been in cocoa business for more than 187 years. So we have very long years, and good research has been done over so many years, and we have the data working with the farmers as well. So what we do in terms of the cost is also try to talk our partners and our clients into the need to ensure sustainable production of cocoa. And I think over the last 2 decades, the key has been sustainability, sustainable. How sustainable are we in the use of our resources? So our clients are basically buying into that, and whenever we develop a product, we go to them, we discuss with them, and we seek their support and their partnership to be able to implement this product for the farmers. And then on the ground, we also look for partnerships because we are selling products to the farmers, but we sell this product on credit. We realize that we are not a bank and we are not a financial institution, and we do not want to do that. So we want the farmers to be able to have, link them up with the financial sector. So what we do is that we find partners in the financial sector who will collaborate with us, open bank accounts for the farmers, encourage them to save, and then through their savings, we give them this productivity package. The idea is that the farmer will continue to save and create a history with a bank or with a financial institution so that in the long term, he can independently go and access financial services for his farm, and we don't need to come in again.
Thank you very much, Emmanuel. Dickson, you mentioned partnerships. For your product to work and for your model to work, you need to have a close relationship with the agribusinesses that are supporting the smallholder farmers. What have been the challenges that you faced forming these partnerships with these agribusinesses? Okay. How do you solve them and tackle them on a day-to-day basis?
Yeah, thank you for that question. It's actually one thing that we've struggled with. We've not had a problem with agribusinesses that are nascent, that are starting, because they're also looking to provide some value to their member farmers so that they don't do side selling. So they want money for inputs for their member farmers, and it becomes easy for them to give us the data. The only thing is that the data is not as clean as we want it, and since this is a digital product, we have to invest a little bit in cleaning up the data and plugging it into our system, and for us to be able to deliver the services to them. The tricky bit comes with the more mature agribusinesses, because these ones already have a financial service association going on within, and so they see us as competitors. So what we've been trying to communicate to them little by little is to say that we can backstop them. They understand their members better. They can do the business to consumer loans, but we can give them the loans at a business level so that they're able to efficiently offer services without getting stuck at any one point. So that's how we've been approaching these particular partners. And then, of course, there are other partners like the online trading platforms who are doing the retailing, and then there's need for finance. And so they say that if you plug into our system, we already have all this data that can convert into financial service. And for us, we say our best partner is the one that wants to give us this information for free because they care for the smallholder farmer anyway, and they say, hell no. So we have come up with a data partnering policy that we are still polishing with time to see how we can do some commissions to data that we receive from these kind of partners.
Monetizing data, I mean, that's an exciting topic, but maybe not a topic for this panel. At this juncture, I'd like to ask the audience if they have any questions or comments to the panelists. Are the microphones around the room?
I have a question for Biopartner and Neumann Café. From our experience, farmers are willing to invest in their farms and increase productivity if they know they are going to earn more. Do you guarantee a floor price for the coffee and the cocoa? Because as the markets get flooded with more coffee and more cocoa, if people invest in their farms, I mean, how do farmers know that the price is not going below, is not decreasing, so that in the end they are not better off? And then the alternative question is, of course, instead of providing farmers with fertilizers, etc., why have you not increased the price of their cocoa and coffee in order to improve their incomes and have farmers to decide where they want to invest their money?
Thank you. Are you ready to answer? Okay. Please go ahead before we get the next question, the panelists. So, Catalina?
Yeah, so there's a couple of parts to the answer. So first of all, on the coffee price, even if coffee farmers all over the world were to double production, that wouldn't necessarily have such a huge impact on price, because actually today, the speculative part of the volumes traded in New York City or in the London Robusta market are like more than 10 times the real volume, okay? So the big drive of price today is not the real production, is, speculation. So that's one. Number two, so we don't enter a price fixation for the future. The reason being is, if we fix a price with a farmer today, so let's say we give him the fertilizer and we say you pay us with coffee, and we fix the price for 6 months from now. If 6 months later, the actual market price is above what we had fixed, this farmer will not bring the coffee to us. That's for sure. Excuse me?
Do you put a floor price? So.
A floor price. So a floor price is complicated. This is basically what fair trade coffee is. There's a floor. But it only works if we can also sell with that floor to our customers. So our customers are Starbucks, Nestle, all of the big roasters, right? And if we don't have a floor with them, then we would just lose money, right? And so we could not enter that transaction if we say we put a floor for the farmer, but our customer is not giving us a floor. So that's why we can't really do that. We would just kind of go bankrupt, basically.
Emmanuel, maybe you want to add to that conversation from the cocoa perspective.
Yes, for us in the cocoa sector, it's very difficult to, set a price, a floor price or a ceiling on the price, because one, we don't control the prices. The price of cocoa is mainly determined by demand and supply in the global marketplace. And in West Africa, like Ghana and Cote d'Ivoire, the government also sets the minimum price to be paid to the farmer in every crop year, depending on the terminal prices of cocoa. So we are not able to do that. But because we are training our farmers to produce cocoa in a sustainable manner, our clients are also willing to pay us a premium for the efforts we do. So we, in addition to the prices that are set by the government, we pay a premium to the farmer when they produce in a sustainable manner. And then to add to their income also, we try to encourage them to cultivate other crops. Of course, in Cote d'Ivoire or in Ghana, it's difficult to find a farmer who cultivates only cocoa. They will do other staple crops like maize, like cassava, banana or plantain in addition. So what we are trying to do is to also help them and provide them with some kind of either seedlings or other incentives that they need to cultivate other crops to augment the income that they will make from cocoa farming. So if the price should drop, yes, they get the shock. And if the price goes up, they get the shock. They get the boom as well. But we always try that they get their premium and also support them to get income from other crops as well.
Thank you very much, Emmanuel. Next question. We'll hear from the lady there, and then from Lisa next.
Thank you. I wanted to talk about client protection. When financial institutions are financing through loans farmers, we have to respect very specific client protection principles, transparency in pricing, the respect in the treatment we are giving to the clients. And the difficulty with the mechanism where traders are usually financing is that nothing of this is clear. Okay? In Cote d'Ivoire, we saw a lot of abuse from traders that have a lot of power towards the farmers and can force them to take the products through them and can put whatever margin they want on it. And therefore, financial services is no longer giving more power to the farmer, but rather having a new business model on inputs by the traders. So my question to you is, if you were to advise what kind of client protection principles were to be put in the system where traders are financing, what would be your recommendations?
Thank you very much. You didn't mention your organization and name? Thank you very much. Catalina, are you ready to start? And then Emmanuel? Or we'll start with Emmanuel and then Catalina this time.
Yes, protecting the farmer against, how do you call it, traders who want to make more profit from them is a very difficult one. And I would say it requires a holistic effort from the industry players to prevent this thing from happening. Of course, we have the cocoa traders, we have the agro inputs dealers as well, who are all into this market of providing credit to the farmers. But for us, we believe that we need to do business in an ethical manner, and we also need to make sure that the production is sustainable. If I sell a product to a farmer this year, and he's not able to pay, or he ends up using all his income to pay for the product, he's not likely to come back next year. So for us, adoption is key. And adoption is that the farmer buys a product, he sees improvement, and the following year he will come back to buy again. That is the driving force behind what we do. It's not about making profit from the farmer. Our profit is at the high level, processing the chocolate, and not necessarily selling inputs or buying cocoa from the farmer. So it's kind of difficult. You have other traders who just buy the cocoa. They don't do any other thing else. So all their source of income is from buying the cocoa. And that is where the difficulty is. We need some regulatory authority to be able to regulate how they do this kind of lending to the farmers.
Catalina, do you want to add to that?
Yeah, so in our case, this whole part around client protection and transparency has been very, very much at the heart of the design from the beginning as well. And actually part of that PPP that we've got with GIZ is focused exactly on that, because even though we want to be transparent and we're putting it all out there, the information on what the interest rate is, what it means for them, but the level of literacy of our customers is on average not even completion of primary school. Okay, so it means we've got to start from a very, very basic understanding of what's an interest rate, what's a loan, really. And the way GIZ is helping us is they have brought in financial literacy experts to design a whole training module, like 10 sessions, to be deployed actually independently from us. So I think that's even better in the sense that it's not us, explaining to the customer, but actually GIZ is making a very kind of independent assessment of what our product is, explaining it to the customers. And in fact, what we've seen is that other financial service providers that are operating close to us are being much less transparent than us, saying the interest rate is like 12%, 14%, and then when you go to see, it's actually something very, very different from that if you add all the fees and administration thing here, da-da-da-da. So I think it's huge, and actually, yes, there could be abuse because these people are really, they have barely been to school. So it can lend itself for abuse, but I think if one makes a decision as an organization that you want to go really transparent and you want to do things right and you want to set up something with a solid basis, well, we're not thinking like we're just going to kind of take away from them as much as we can and next year we're not going to be around, right? Like we want to be around 50 years from now working with that same farm, with that family. So the last thing we would think of doing is sort of trying to trick them over something so that 2 years from now, they don't want to work with us anymore, right? We want to build a long-term thing with them.
Thank you very much, Catalina. Question from Lisa?
Hi, I'm Lisa Schrader with Mercy Corps in the AgriFin Accelerate program. Financial services to farmers is hard because the process is so complex and so long. And I thought it was interesting that Catalina said that you'd built an Android app that was helping you to essentially make this process work and incorporate the financial services. We've done a little bit of this with the World Food Program, helping them build an Android app that helps follow this path and bring in lots of partners. But we have had a hard time, pushing it down below, into the farmer level. It's really at the aggregator level. Then we have Dickson essentially saying how important it is for the banks to get this data. So, smartphones represent a really rich interface. I think that can begin to transform agricultural systems and put farmers on grid. But we're waiting to see, when will smartphones really begin to penetrate the rural areas and make a difference. We know that Mkopa Solar is the largest reseller of smartphones, and that's all in rural areas in Kenya. So how do you guys see smartphones, Android apps, and this kind of technology penetrating into your markets in the next 10 years? And what will that change?
Because Dickson hasn't spoken for a while, I'll allow him to start with this one.
Yeah, so you realize that, just like you rightfully put it, Lisa, the feature phones are the most common, and they still are in the hands of most of our smallholder farmers. And so that's why our products for now are tailored around the USSD and not the smartphones. And the USSD is helping in terms of even information that we pass to the farmers. USSD can link to SMS model using the SMS chatbots. So you can see we are still using USSD and SMS more than anything else. But for the years to come, the transformation becomes easier and life becomes better. Anyone who's been using a smartphone right now, going back to a feature phone is really difficult. It makes the customer lazy, and I think that transformation is going to happen at that point. But right now, 70% of the farmers that we expect are still on a feature phone, what we call mulika mwizi in Kenya. Yeah.
Thank you, Dickson. Catalina?
Yeah, so in our case, just a clarification first, we didn't build the app ourselves. We hired a company whose core business is to build these apps for tracking field operations, and we told them what we wanted, and then they did it, which I think is great, to be honest, because they are just really good at what they do, and I don't think we could have been able to do that on our own, to be honest. Now, on smartphone penetration, the communities where we are in Uganda, farmers don't have a smartphone. So, just kind of, we've been having this discussion about smartphones and technology, but right now, today, in rural Uganda, the grand majority of farmers have the old phones, okay? So we're introducing one smartphone per farmer group, which is one smartphone per 500 farmers. And it's pretty disruptive. It takes a lot of work. And again, thanks to a lot of our partners, we're going through trainings and explaining how it works and how this is basically, it's becoming the operational software of these farmer groups. So before, these groups were noting down all transactions of buying coffee from members in pen and paper, and now we're saying, let's try to do it digital so that we can have a digital record at the end of the year. And we're trying to explain to them, look, if you do this, you're gonna have a digital track record of your income. And then you can potentially also go to a bank and tell them, look, this is what we've done this year. And it's digital, and it can be in Excel. But this has been tough. There's resistance, and I would say a big of the resistance is around vested interests of leaders in the groups who actually benefit from the lack of transparency that the pen and paper provide. And so once you've got a digital, the numbers have to add up, right? Like it cannot be like, oh, this money got lost, or this just doesn't add up. Like the numbers have to add up. And so this is part of the process, I think, and hopefully it's gonna go faster. And at the beginning as well, we kind of very quickly realized like we gotta find young farmer leaders who are actually interested in technology, because trying to do this with somebody who is, you know, in their 60s or 70s, it's not gonna work. Well, when we try to do it with people who are in their 20s, they're actually much more receptive, they learn fast, they are open-minded, and so now we've got a bit of a strategy going on where we're just trying to identify young leaders in each of these groups, and those are the ones we train on the smartphone, and we try to make them kind of the champions of the new technology.
Thank you very much, Catalina. Time for a last 2 questions. There's Nathan, Sieka. All right. Mike at the front.
Thank you, Sieka. My name is Nathan. I'm from Uganda, and I'm very happy to see what you've done in my country. It really gives me a lot of motivation. From your description, you say that you're providing input credit to these smallholder farmers. How do you envision, because the Sieka research we did in Uganda indicates that farmers are looking for a holistic suite of financial services. They're looking for insurance, they're looking for payments, they're looking for credit for school fees, they're also looking for savings options. How feasible is it, probably in the medium to long term, to get your solution platform integrated with other financial service providers so that these farmers are not only getting input credit, but they're also able to access insurance, the range of other financial services that they're basically looking for? Thank you.
Okay. Just hang on to that. Let's hear the second question because of time. So,
I don't have a question. I have a lament. Opportunity International, a consultant, and I head up the network. I grew up in India at the time of the Green Revolution. You mentioned that. I now live in the US. And my lament is this, is the world's richest farmers in the OECD countries in 2013 received $252 billion of farm support price help assistance from the government. 20% of total receipts of farm revenues were from the government. So we're giving them a handout. We're talking here about the lady who lives on $1,200 a year. And we are talking about giving her not a handout, but a hand up. And I think all of us are striving to give more of our small farmers that hand up. I'm not sure that without the support from the local governments, the hand-ups will ever get to where they are living on sustainable incomes. Because the evidence in the developed world actually points to the contrary. You need continuing farm support. 60s growing up in India, part of the Green Revolution wasn't simply technology, it was farm support, pricing, which continues till today. Right? So what I would say, one, my hero is a smallholder farmer. And second, that all of us and all of you for trying this out and striving and standing with them. But I do believe that we should come together and work with our local governments, the point that you made about the regulatory approvals and changes in laws, both on the question of subsidy, but as well as on distribution being on a fairer basis. So just a comment back to you.
thank you very much. So back to Nathan's question. At what point do you see that bundling additional financial services will happen under your model? And I'll also ask Dickson to talk about what they see as a future for their products provided to smallholder farmers.
So we don't envisage becoming the provider of all the financial services. So the way we see it is more like when the farmer is ready and wants to go to the bank, we are more than happy to link them to the bank so they can do their savings, if they want to do a mortgage, or whatever other more complex services they want to access. Right now, unfortunately, the way we see how these farmers' lives are, it seems like they are pretty far from that. They are really just trying to survive, and they are very scared of walking into a bank. But at some point, hopefully, they will make the transition, and we will be very happy to, bridge, provide that bridge, basically.
Thank you, Catalina. Dickson?
Yeah, I'll simply say this is a journey. We started by creating a culture of savings. So accounts are open, deposits go in there, scoring is done, and we're also providing a service to off-takers to do bulk payments to individual accounts for the members who supply to them. So they have this big account, and then there are many small accounts, and they send us instructions and say, deposit to farmer X this, farmer Y this, farmer Z this, every month. That builds a history. So from that history of the farmers already, we can be able to score and give a limit of how much they can borrow. And the next time we receive the instructions, we send back a statement to the off-taker and say, you told us to do this, but this farmer already had a small loan with us of $50. And so we deducted that, and this is the balance that we've deposited, just for clarity. So where I see us going is another insurance product bundled to this. There's a lot of NFI, non-financial income that we are seeing, which is movement of cash to other wallets, back and forth. So a lot of income is not going to come from interest from the loans, but from the transaction fees.
Thank you very much, Dickson. I have time for just one last question before we wrap up this session. And this question will go to all the panelists. I was going to ask my question. Okay, please, you've raised your hand.
My name is Kafui, and I'm coming from Global Communities, YEDA. I'm trying to ask something in connection with how we can enable farmers achieve the sustainable goals that they set for themselves, smallholder farmers. And the challenge they have, one critical challenge, is with agric extension. That's a specialized area anyway. And I'm wondering if any of you or any of the financial institutions or interventions that you're putting together is thinking of adding this critical bit of the loop that is missing to the products that you give. Because if you give money, and what they actually also need in addition to turning that money around has to do with getting specialized information or critical consultation that has to do with issues around pests, issues that have to do with the type of crops that they have to plant, harvest, and then post-harvest losses, etc. How do we all think about making technical advisory services a part of the financial interventions that we give to smallholder farmers? Thank you.
Thank you very much. And in fact, that was almost my last question as well, so well done. I'll just add something to that. On top of the need to give this extension and non-financial support to the farmers, how do you justify this in your organizations? In your case, actually offering those financial services and the extension which is normal for you. At Dickson's case, at MobiGrow, offering the same services. How do you justify, what is the business case for this? Emmanuel, would you like to start?
Yes, thank you for your question. And I will say that our productivity package, as I mentioned, has about 3 or 4 components. One is the inputs, 2, we provide agricultural tools, and then 3, we provide services. And the services we provide are mainly specialized services, like pruning services, spraying services. We don't give money to the farmer because we don't just also give fertilizer or crop protection. We train the farmers and give them the right knowledge on how to apply the fertilizer, how to apply crop protection. Because we realize that without the right knowledge on how to use this product, it is worthless, regardless of the amount of fertilizer you give them. For instance, with fertilizer application, you have to look at the age of the trees. If the tree is very old, cocoa tree over 25, 30 years, regardless of the amount of fertilizer you apply to this tree, it will not yield any results. So that's why we have our coaching system. It's a kind of extension service that we provide to the farmer. I try to assess the state of the farm, the age of the trees, and let the farmer understand what is best for him. If the cocoa is so old, over 30 years, then our best solution is replanting. So we talk the farmer through replanting, cutting down the tree, and planting a new one. We don't just sell the services to them. And also for our business case, I mean, for us in Callebaut, we have a mission of having 100% sustainable chocolate by 2025. And by that, we are doing this on 3 key thematic areas. We want to uplift 500,000 farmers globally from poverty. We want to eradicate child labor from our supply chain. And then we also want to be carbon positive. We want to thrive nature, make sure that agricultural services does not lead to deforestation, for instance.
Thank you, Emmanuel. I mean, that's good enough time. Catalina?
Yeah, so first of all, we also include training, extension in the package because it's critical. Like, we cannot just give them fertilizer if they don't know how to apply it. So it's included. And on the business case, I think there's something interesting, which is, so we are not looking to make money out of the financial service provided to the farmer. We're hoping, or we're aiming at our farmer financing unit more or less breaking even. But where we make the money is on the coffee. So we get paid back with coffee beans, and then we trade those beans, and we make money out of that. So I think that gives us a bit of an advantage, if you will, with the normal costs of reaching that farmer with that financial service, because we have another revenue stream, which is the actual commodity. So I guess this is where it's a little different, and we can go a little farther and take those costs because of that.
Thanks a lot, Catalina. Dickson, last but not least.
Yeah, so you'll wonder why a banker wants to get involved in agronomy. We do get involved. We have no choice. We have to train on land preparation, soil fertility management, crop protection, harvest, post-harvest handling. And we use a hybrid model where we also use SMS tips and field extension service providers, who are not too many, but we use a model of also training of trainers, especially for those farmer producer organizations that have workers that work around them. But just to wrap up this thing of return on investment, you realize that organizations that choose smallholder farmers to be part of their suppliers to supply raw materials, leave alone even customers giving them services, but to make them part of the value chain, then support services are inevitable, because smallholder farmers are many, and it is hard to make them a supplier who would understand your needs in terms of quality, quantity, and the timelines that you want that supply to be done. There are a few organizations that have tried this. Diageo has supported a lot of sorghum farmers, and they have invested millions of dollars when it comes to training them so that they can be able to supply. They cannot talk to 3,000 farmers at a go, but that farmer group has to have a marketing coordinator who understands the needs and communicates that back to the group, and it operates like any other formal organization that should be able to deliver that crop. We've seen Nestle doing a lot in coffee and cocoa, and we've seen the Coca-Cola company doing mango and passion fruit work in East Africa, a project that I managed and won an award, a P3 award, private-public partnership impact back in New York. So moving forward, this is a conviction I'm trying to make to my also executive committee, that it is going to be long. Return on investment is longer because it's little money, but we are looking at masses, and when they come in, everybody will smile.
Thank you very much, Dickson. Ladies and gentlemen, that's all the time we have for this conversation. In terms of wrap-up, I've had a lot of points around really knowing your customer, really knowing the farmer, understanding what their needs are. As the lady mentioned, bundling financial and non-financial services, leveraging technology, as a key point. And last but not least, partnerships. The only way to get this done, the only way to really get the smallholder farmers included financially is largely through a lot of partnership. Thanks a lot. Let's continue this conversation throughout the rest of the days of the conference.